All right, what it do, what it do, what it does. We're gonna go over today's price action. Okay, let's go over today's price action. This is from 9:30 to 12. Right, this is my trading window. So I don't trade pre-market. I don't trade Asia. I don't trade London. Only trade New York session. So let's get into it. First thing you want to do, first thing that I always do, right, is I look for the equal lows. First of all, I look for the liquidity. Right, liquidity is always the lows or highs. Right, you always want to draw your liquidity. This is the direction. Where are you plotting for the direction to go? You want it to go up higher, or do you want it to go lower? So the first thing I look for is key session liquidity. Right, the first key session liquidity I'm looking for is because I'm way at New York. So we had London and we had Asia. So we got Asia lows. So we got Asia lows are right here. You see how it has not been swept out yet. So this is a target for me. This is a good liquidity zone, and we have two equal highs, two equal lows. Sorry, right. So look what we have. We have Asia low that has not been taken out the market. So this is a key liquidity zone. It's a hot spot. And then we have these two equal lows, right? It's called double lows. So whenever you have double lows, it's extremely a hot spot. So, and already on a higher time frame, we're doing a lot of sweep of sell side. So we're already kind of bearish. We're already kind of bearish on the day. So now, hold on, okay, my dom calling. What's up, eh? What's up, babe? I'm in class right now. You call me back like in 20 minutes. I'll be done. I'll do you one better. You'll pull up on me in 20 minutes. See, papito. Even better. Say less. All right, bye, bye. All right, so you have these lows. So now these equal lows are my target, and this low, right? So now, which is my main draw on liquidity. So we already know. If you don't know, in order for it to go lower, right? Because remember, we want it to go lower. In order for it to go lower, you want to see it go higher first and then lower. So keep that in mind. So now I'm looking at all my liquidity zones. I'm looking at and then this zone up here. So I have my daily fair value gap and I have my two little liquidity zones up here on the buy side. So I have my buy side levels and I have my sell side levels. But I'm not really worrying about too much of the buy side level because I'm bearish. So I just need to see a move up, right? In the opposite direction that I'm looking for. So remember, if I'm looking for it to go lower, you want to see it go higher first and then go lower. So now, so I'm setting up the play for the day. And now last thing I look for the midnight open, which is here, midnight open, which is right here, and I'm looking for the 8:30 open to see where's that relative to price. So now that I got all of my key zones, right? I got my direction, right? I'm expecting to be bearish. Why am I expecting it to be bearish? Because we have these double lows and Asia low that has not been swept out of the market yet. Cool. Now I have my zones above, right, which is my buy side liquidity up here, and I have this daily fair value gap, right? It's a daily fair value gap, daily fair bearish fair value gap. Okay, so now remember, I'm looking for the market to go up first before it goes lower because I'm looking for it's called a Judas one. It's called a fake route, right? Because it's something that's called an AMD model, right? You get accumulation, back and forth, accumulation, and because I'm bearish, right, I want it to go lower. I want to see it go up first, faking out, right, to fake out the opposite side of the market. So I want it to go up to fake people out to think it's going to go higher, when in actuality it's going to go lower, right? So now it goes up, price goes up here, boom, price opens and goes up. And what it do? It sweeps out this buy side liquidity, right? So we have this internal buy side liquidity. So you see how it comes up and sweeps out this high right here. Boom. So now that we're up, now I'm looking at, okay, where are we relative to the midnight open and relative to the 8:30 open, right? Now that we're way up here, 8:30 open is below us and midnight open midnight open is below us. So now I'm in a premium, right? I'm in a premium. So if I do my fib from this low to this high, look, where am I relative to price? So look, 50% is right here. You see how I'm way up here? I'm in a premium. We know the best short plays happen in a premium. So everything is literally aligning perfect for me to go short or for my buy to be correct. So now we go up here, boom. We do not get to the SIBI. We come back down. So now I'm looking at order flow because remember, I'm expecting bearish order flow. So let's see what happens. We come up. We have these 1, 2, 3, 4 bullish candles, and you see how we close below here. We create an order block. So we got a sweep of buy side liquidity, and we got an immediate market structure shift to the downside. So the order block is, remember, the series of bullish candles also. So I'm gonna draw that from the low, from the opening price, extend it through. And look how you could have caught your first play. Oh, and we have a bearish fair value gap right here. Small little bearish fair value gap. Sorry, it's not a BC, it's a SIBI. So you got the bearish fair value gap. We go down, we never retest it. That signs a bearish order flow, leaving a breakaway gap. We come down, close right here. Look how we close right there. Look how we close and then we come up and retest the bearish order block. Look how we hit the line. And then we literally immediately displace all the way down. So you could have called that play. Right to the 8:30 open. Look at that. Easy, quick play. Now what happens? Remember, you want to see, look at all of this. Look at all of this sell side liquidity. Look how sweet. Look how even. Look how trend line liquidity this is. This is a target. Look how we come down and sweep that. Boom. So now if we go to the 5 minute, so that was all 1 minute stuff. So we go to the 5 minute, what we got? We have a 5 minute inverse for value gap here. This is what I was expecting to come up and push price lower, but it never did, right? And then you got that 5 minute order block right here. Right here. Look how it uses that zone and goes lower. So look what happens. So on the 5 minute, what happened? It comes down, comes back up. Look how it touches. Look how it retests the order block. Goes down. Look how it comes right to the line. Look at the order block here. When we close below all of these bullish candles, you want to see price support lower because we get a small little internal sweep. We don't have the willingness to get to the SIBI, and we displace right to the midnight open. So this was a day where you see how if you were to let your trade one, you would have got stopped out. You had to get out right at liquidity zones. Right, you had to get out at liquidity zone because now you see how it came all the way down, and then it retraced all the way back up. This is a lot of points, right? So it probably stopped niggas out. Then it dumped. Then it comes back up. You see how it come right back to the SIBI. Do a little color outside the lines a little bit. Because remember, the market just can't go down and down and down and down, right? So when it went down here, it created another liquidity zone here, right? You have another liquidity zone here. So remember, whenever you got equal lows or equal highs, you want to see it run away from it because the market has to generate. Look how it comes down, stops right here, goes all the way back up to stop out everybody who put their stop loss low here, on above this buy side, these internal highs. Look how we look how we generate a low, we retrace back up to the inefficiency, sweeping out some buy side, and then now look at the bearish order flow. But that's the 5 minute. So you get a pull right back into the 5 minute. Look at the 5 minute inverse right here. Now you go back down to a 1 minute. Look how we get we're holding support, support, bam, we close underneath. When you close underneath any PD array, you want to see it be used as a inverse. Look how it comes right up here, right to the fair value gap, right to the little order block. Let's delete it so you can see it. So look, you have, this is the order block. You have this as the order block. Look how price respects it every single time. Comes up, creates the order block, comes up to the fair value gap, comes up to the order block. Look at the bodies. The bodies is down here, the wicks are up here. Displaced lower, making this bullish candle another order block. Look how it comes up to it, displaced lower. Look at the bodies, lower half. Look at the speed look at the speed. Look at that speed. This is what I mean when the same zone that took us higher is going to take us lower. Now we're underneath it. You want to see it retest it. Look how it stays in the lower half and displays lower. Look at the order block. You have 1, 2, 3, 4, 5 candles right here. We displace lower with a fair value gap. Look how it comes right into the fair value gap, coupled with the order block. Look at that. The order block is here. Look how it touches it perfectly. The order block. Look how it comes to the order block and it retraces it to the inefficiency. And it just dumps. Right, create another order block. Look at this order block here. Remember, the most sensitive part of the order block is from the low wick to the opening price. Look how it comes, touches it perfectly. Look at that. Coupled with the fair value gap. See how we go down? We go down, we come up again. Respect it one more time. Like it does the same thing. Look how it goes down, generate this low right near the minute open again, come all the way up, sweeping out this buy side, internal buy side, into a key PD rate, which is this order block's wick. Then same thing, you're going down now. For it to go lower, you want to see it go higher. Once it does the manipulation, you want to see it disrespect the opposing fair value gap, just like this. So now we got this liquidity zone here. Of course, and we got all those lows that's down there also that we're hunting. Remember, the market just can't go up and up and up. It has to generate liquidity, then hunt liquidity into a PD array. Then we use the same zone here to go up higher, which is a bullish fair value gap. Once we go underneath it, you see how it's here. It expands. Look how it comes right back and retests it. And then dump. Look at the order block. Look at the fair value gap. It's the same thing over and over again. Or that's the fair value gap. This is the order block. Look at the bodies. Bodies is staying right in the lower half of the order block. And it's kind of majority in the lower half of the fair value gap. Yes, it kind of colored outside the line, did a little mohawk. But look at the bodies. It's all about the narrative. Look at the bodies of the order block. Then look what happened after that. Displaced all the way down. Look at that. All the way down. All the way down. Hold on. How it displaces all the way lower. Right to the target. Right to the target we was expecting it to reach, which was Asia lows and the double lows. So you see how when you see what I mean meaning, right? Hold on, let me find it. So we starting off expecting it to go lower. This was our target, right? So we're expecting a move higher, right? To go into a premium. Because remember, in a premium, that's when the best short plays happen. So we go up, we sweep internal buy side, immediately disrespect the opposing fair value gap right here. Disrespect the opposing fair value gap, which is this fair value gap here. We didn't get to it. We touched the order block, then display to the midnight open. That's a lot of points you could have caught. Then we pulled back up. Remember, because the market has to retrace, right? It has to do the market has to do four things at all times, right? Which is generate liquidity, which means it's going to generate the highs and generate the lows, right? Then it's going to pull back to an inefficiency or to a PD array, right? Pull back to a PD array, so it's going to generate and sweep. So it's going to generate and hunt, then pull back to an inefficiency or pull back to a PD array, and then go. Then we go. So I did not catch no plays today. But I definitely tape read what happened today live in the market, so I was kind of correct on where I was expecting it to go. So that's a good thing. But you see, last thing I want to say, it went up to go lower. It generated more lows. It gave it more reasons to go lower because remember, it just can't go down and down and down and down. Because once it's all the way down here, people are expecting it to just keep going lower. So after a sweep, they're gonna retail traders, they're gonna catch a breakout, they go lower, and that's where you get dragged across the coals up here. Then we pull back to inefficiency, sweeping out the internals. Then we go down, stop, generate more lows, pull back to an inefficiency, fair value gap, and then dump. Right. So the whole key thing is that remember, in order for it to go lower, you want to see it go up higher because the best short plays happen in the premium. If you're bullish, you want to see it go lower then go higher because the best long plays happen in a premium. So yeah, so if you made it to the end of this part, please type in the number 46 so I can know that you made it this far. So I can know that no matter how many views or no matter how many views is on this video, if you wrote 46, you really, really do want it because you stayed all the way to the end. If you're looking for information, and that's a great job. If you made it to the end, you did a great job because most people cannot make it to the end of anything. So if you made it to the end, write 46 to let me know that you made it all the way here. And watch how many people don't write 46. Let's get it. Appreciate y'all for tuning in.